Hello guys, Joseph here again. Thank you so much for joining me. This is part 2 of the Cypher pattern, and in this video I'm going to show you guys how you can go about trading the Cypher pattern once you've identified a valid Cypher pattern. So let's go over to the chart and I'll show you guys where you can place your targets and your stop loss. So I'm going to start with the bullish Cypher pattern. So with the bullish Cypher pattern, once the Cypher pattern completes, you would expect the market to come into this point D and reverse and go back up. So when it comes to target, first thing I'm going to do, I'm going to just draw just a line right there. And maybe change that to, let's leave it as blue. That's going to be sort of our entry point. That's going to be where we're going to place our buy orders. So once we place our buy orders with the expectation that this market is going to reverse and go back up, this is how we place our target. And there are two places you should be taking your targets off if you're trading this pattern. The first target, you should be taking it off at the 382 retracement of the C to D leg. So I'm going to go to draw the Fibonacci from the C to D leg right there. So the first target should be taken off at a 382 retracement. So I'm going to bring in my target box. Actually, before I do that, let me make sure this is where I want it to be. So I'm going to bring in my target box. So for the first target, you're going to be taking that at a 382 retracement. So right there, let me change that to green. And for the second target, you're going to be taking your second target at the 618 retracement of the C to D leg. So this is how it goes. This is how you place your targets, and this is where your target should go. And the next thing you do is obviously the stop loss. Now the general rule for trading advanced pattern is that for a bullish advanced pattern, the stop loss has to go below X, and for bearish advanced pattern, the stop loss has to go above X. So as long as your stop loss is anywhere below X, then you're fine. But with me, I like to do it differently, because I place a lot of emphasis when it comes to the risk to reward ratio that I take on every one of my single trades. So this is what I do. I make sure that the risk to reward ratio on my first target on every single trade that I take is at least 1:1. Because in that way, I know I can be an average trader. I can only win 50% of my trades and not lose money. I mean, that's the most important thing. That's the first rule that any trader needs to know when it comes to trading. You need to be able to protect yourself. So how I do that is I simply just clone this and just invert the triangle and put it there. So let me go ahead and change that to red. So we can see that not only does this retracement line comes in below X, you can see that stop loss is well below X, because the stop loss is going to go at the end of that box. So not only does it comes below X, it also gives me a risk to reward ratio of at least 1:1 on my first target, and that is really priceless, guys. That is really important. So let's go ahead to the bearish Cypher pattern, and we're going to do the same thing again. So I'm going to go ahead and draw just a little line at point D. So with the bearish Cypher pattern, you would expect the market to reverse and go back down once it completes that bearish Cypher pattern. So I'm going to go ahead and bring in my Fibonacci. You're going to be taking your targets the same place as well. You're going to be taking two targets. One, you're going to be taking it at the 382 retracement of the C to D leg. So I'm going to go ahead and draw that C to D leg. Let me change that to green. And then you're going to be taking your second target at the 618 retracement. So I'm going to go ahead and take that off. And with the stop loss, like I always do, guys, this is all about consistency. Once you start trading on this, you need to be very consistent in everything that you do, because consistency is the number one thing that it's gonna keep you disciplined. So this is it. I've got my 1:1 risk to reward ratio on my first target. And the reason why it's so important to have this risk to reward ratio of 1:1 on your first target is the fact that, I mean, I've already mentioned that you just need to be a 50% trader. You just need to be an average trader, not to lose money. And the edge, and once you're able to develop that consistency, then the next thing to do is just to get that little edge that is going to give you the extra 10%. And that can come in the form of, getting your second targets to be hit. Because remember, we're only talking about the first target here. We've got the second target here. If your second targets are going to be hit in every single one of your trade, then that's going to give you an extra advantage. And there's little things that you need to do as well in order to give you that extra bit of advantage over a lot of traders. And one of the things that I do is, when it comes to trading advanced pattern, is every time this market, like for example, if I'm trading a bearish Cypher pattern, so once I identify the bearish Cypher pattern, and once I identify the completion point, which is all I have to do is I wait for the market to come into that point. And once the market comes into that point, I usually use the completion of the Cypher pattern in combination with my RSI. So what I will be looking for on my RSI once the market comes into that point is, I'm going to be looking for some sort of a bearish divergence conditions on my RSI, or I'm going to be looking for my RSI to be oversold, because that gives me an extra confirmation. That gives me that's the extra 10% that I need. And I'm going to show you guys a few examples of some of the trades that I took on TradingView, where I've actually placed emphasis on the Cypher on the RSI, and I'll show you guys how that trade turned out to be. Okay, so now that we've seen what the Cypher pattern looked like, now we can see that we can understand all the rules. We've understood all the rules that make up the Cypher pattern. I'm gonna go over to the chart and try and see if I can spot these patterns for you guys. So I'm just gonna pick a random. It's taking too long to load. So I'm going to drop this down, maybe to 1 hour chart. I'm actually going to flip over to the Japanese yen, the US dollar against the Japanese yen, and I'm going to try, before I actually showed you one of the charts that trades that I took on that one of the trades I took on TradingView, I'm just going to go ahead, try and flip back and try and see if I can find a Cypher pattern. Okay, I think I've got something that looks like a Cypher pattern right there. So let me go ahead and bring in my Fibonacci tool and see if it is a Cypher pattern. So I've got an impulse leg there, X to A. It's just imaginary. I'm not going to actually explain it. It's just, so X to A leg, I can see that. Okay, let me go ahead and draw the impulse leg for you. I've got the X to A impulse leg right there. If I don't like this line, so I've got the X to A impulse leg here. I've got my retracement here, and what did we say about the retracement point B? It must come in and touch the 382 retracement. It can touch the 50% retracement, it can touch the 618 retracement, but it shouldn't touch the 786 retracement. So we can see that the B point has come into the 50% retracement, has even gone beyond it a little bit, but it's still valid for a Cypher pattern. So now the next thing to do is, we still leave our Fibonacci tool where it is, because remember, drawing the Fibonacci tool from the X to A leg gives you 2 points on a Cypher pattern. It gives you the B point and also gives you the C point. So the C point of a Cypher pattern, for it to be valid, it must come in between the 127 extension and the 141 extension. So we can see that the C point has come in and it's even gone beyond the 127 extension, but it hasn't touched the 141 extension. So we've got the A to B leg, X to A, A to B, B to C. So the last thing that's left to do is to find the entry point. And for the entry point, all we have to do is just extend this Fibonacci all the way to the C point, and the retracement we're looking for, or the entry point, the C to D leg, must come into the 786 retracement of the X to C leg. So right there, we're going to draw all the way and see if we get any retracement that comes into the 786. So we can see that the market, so this would have been our entry point. If that was our entry point, So first of all, I'm gonna go ahead and just bring in my triangle. So because this is a bearish cipher, remember our starting point started from the top, so I'm gonna use that red box. So there we go. So we had a bearish cipher. With the bearish cipher, you expect the market to come into the 786 retracement and then reverse and go back down. And this is exactly what we got. Our stop loss will have gone above X, and we can see clearly that the market hasn't even touched X. So this trade will have been a winning trade. So the next thing I'm going to do is I'm going to show you guys an example where I placed a trade using the cipher pattern on TradingView, and where I used that in combination with my RSI, and then I'm going to show you guys what happened. Okay, so let's go over to TradingView on my profile. Okay, so this is a trade. This is actually on a trade that I took on Friday. So this is it. So as you can see on this trade, after I identified the cipher pattern, look what happened here. I put right there that we had a bearish divergence on the RSI. So a bearish divergence simply means is a situation where if we get a higher high on our chart, so I can see, actually, let me actually try and see if I can yes, so this is it. So if we get a higher high, higher close, but on our RSI, we see that the market, instead of getting a higher high on our RSI, we get a lower low. So this is what we call a bearish divergence. So even though the market is going higher, the RSI is not reflecting that. So once I identified that near the completion of the cipher pattern, so that's why I said, hey, look, I even said it, what happens when a bearish cipher meets a bearish divergence condition on the RSI? It's not a trick question, but we can all agree that the answer is a potential short with the odds slightly in our favor. So let's see if the market continues to be kind to us this week. So what happens is that once we get this kind of combination, a combination of the cipher pattern completion with the bearish divergence condition, it's not a sure thing, but it puts the odds hugely in our favor. So I'm going to go ahead and play this so I can show you guys what happened after I place the trade. So just a second, and it's going to load. So as you can see that the market, so this is where our stop loss went. We can see that the stop loss is exactly 1-to-1 on our first target, because all that did was just inverted that triangle. So our stop loss will have been all the way up there. So you can see what happened. So as soon as the market went there, we had a little spike, but then the market just went back down straight away, hitting our first and second targets. So this is it, guys. This is all it takes when it comes to the cipher pattern. This is all it takes. I mean, at the end of the day, trading as a whole, it's a very, very simple. I wouldn't say it's simple, but it's all about doing the simple things really, really well. So things like trying to make sure you get a risk to reward ratio on your of 1-to-1 on every single trade that you place, and trying to be consistent in your method, your strategy, your way of trading, as long as you have some sort of consistency, because consistency is really, really key in this business. So once you have that, just try and keep things simple. You don't have to try and overcomplicate things. And yeah, I mean, that's all you need to do. I mean, so yeah, that's it for now. That's the cipher pattern. The next series I'm going to be doing is I'm going to be talking on the how I would use structure and Fibonacci to trade the cipher pattern. So to trade the forex market. So if you like this video, leave a comment, share it, and like it, or do whatever that helps. And then until next time, I'll see you. And don't forget to keep it simple. Thank you, guys. Thanks for watching.